What is going on, everyone? Welcome to today. It is Sunday, September 15, and today is a quick installment of doing some deep dive in some companies that recently had their earnings reviews. This is going to be in between the normal Hidden Edge podcast series that we usually do, except this one we're going to kind of focus on specific companies that reported this week, and maybe we're going to touch a little bit on some macro and some live events that are happening this week. So what I want to start out with is to talk about what's actually on the line this week. And I'm sure a lot of you already know the FOMC is having their rate cut, or supposedly their first rate cut, this week on Wednesday. It is the FOMC meeting where they're also going to be providing a SEP, or a summary of economic projections, which basically gives an outline of exactly where the Fed sees the economy headed for the next couple of years, and where they see the rate cut cycle headed toward. So to start it all out, I wanted to go over the rate cut projections for so far. What's going on, Matt? What's going on, ETF FaceTime? ETF phone home. What's going on, Ray? Hey, don't mess with Ray no more. All right, so let's go over this chart, which I'm sure a lot of you are very familiar with at this point. All right. CME Fed Watch tool. I've made a big deal out of this one. I've noticed a lot more people are talking about it, which is really good, because to kind of explain the mechanics behind this is that these probabilities are basically calculated off the Fed funds futures. And the Fed funds futures is a set number of contracts that expire about like every month. And depending on how much people bid up those contracts, how many people sell off those contracts, gives us a good probability of where the Fed might be, or specifically where the Fed funds rate might be at the maturity of those contracts. So for the September meeting, it's basically taking the contract that expires at the end of September, and you have people who own Bloombergs or large money managers. You know, this stuff doesn't really sound like Robinhood or like the retail platforms or anything. It's really just big money bidding up these contracts. And so far, what we're seeing here is that we got about a 52% chance of getting 2 rate cuts on Wednesday, and we have a 48% chance of getting 1 rate cut on Wednesday. Now, the weird part with this was that, and I'm pretty sure it wasn't just me, Friday morning, this was like 15% chance of 2 rate cuts and 85% chance of 1 rate cut. And about halfway through the day, all of a sudden, I saw this shift when I hit refresh on the page, and I thought I was just seeing shit. But I mean, yeah, we're about a 50-50 chance of this. And it's actually kind of interesting, because these numbers usually lean toward, it's like they're setting up the Fed for a bat, right? And the Fed is going to take whatever the market gives it. Like, the Fed does not like to surprise the market, being that the last time the Fed surprised the market was pretty much during the FOMC or Fed pivot that happened back in 2018, where the market basically tumbled about 20% in the matter of a few weeks, mostly because the Fed went very aggressive with their rate cuts, and it was really out of nowhere. So the Fed, or Jerome Powell specifically, doesn't want to go through that again. So it was pretty interesting, because coming into Friday morning, there was like an 85+% chance of getting 1 rate cut heading toward the meeting. And then just like last minute, it went 50-50. And I was actually talking about this a little bit on the Discord. By the way, in case you guys have not yet, please like and subscribe this video. We're trying to really grow this channel to gain a better audience and get a lot of our information out there. So if you haven't, just go ahead and like and subscribe the channel. So continuing on, I was talking about this on the Discord, and basically I think that the Fed might, and I've said it for a while, that they're going to do 1 rate cut. All right. But I think the Fed might actually do 2 rate cuts this cycle, or maybe more. You know, I mean, at this point, usually when you get this close to a meeting, they have a very good probability of doing only, 1 specific number of cuts, whether they're not going to do anything or whether they're going to hike, whatever it is. But we're so close to the date, and this is 50-50, that I think during this week, it's kind of setting up for a little bit of chop this week, not necessarily directional, because what I did notice last Friday was that when this actually began to price in a 50-50 chance, the market stayed somewhat stagnant for the rest of the day. Yeah, it was chopping around maybe like minus 10, 20 points. Minus 10 or 15 points, plus or minus on ES or the S&P futures. But what I'm seeing now is like the market is just as uncertain as where these probabilities actually are. Like it's really like a 52-48, which is pretty much 50-50. So I would think maybe unless something happens this week, something that might sway the market in one direction, whether that might be Harris saying something or Trump saying something, or maybe more escalation of the Middle Eastern conflict, or I mean, whatever it is, maybe Jensen Huang decides to flex in front of the audience like he did last Friday. You know, who knows? Maybe this can kind of sway toward a different direction. But right now, the Fed is in this blackout phase. So it's like about 2 weeks before any FOMC meeting. The Fed or any of the Fed officials or presidents, they cannot release any public statements or even appear in some sort of social media or public channel. And the reason why is because they don't want to give away information, right? Like I don't know, there's like a lot of compliance with that stuff. But anyways, I mean, we'll see what happens this week. I think it's going to be chopped this week for the most part. All right, so that's pretty much all I need to say as far as the rate cut goes. What I kind of wanted to get into was a little bit of the action that we saw this week. As a lot of you know, Oracle reported their earnings. I believe it was on Tuesday. They reported their earnings after close, and the stock was up like 50%. And that was really on the back of some new information that people found out, or I mean, old information that the market realized. Was that Oracle is really starting to become like a powerhouse for hyperscalers. And when I say hyperscalers, I don't mean public cloud providers like Amazon or Azure or even Google Cloud provider, but more on like the private data center scale, because most of Oracle's clients are all commercial or business. So they really focus on more of the private sector portion of deploying cloud computing. So let's actually dive a little bit into that. What I'm going to do first is bring up the Oracle press release for their last earnings. I'm going to share this screen. Is this the Oracle website? Yep, that's the Oracle website. All right. So yeah, I mean, they even had some other news, but I'll talk a little bit about that one later on. Let me bring up this press release. Okay, cool. So you can either open up the press release over here. You can go on their investor relations website and take a look at the metrics that they provide you. And keep in mind, when you go to a press release website for a company, they're going to give you the stuff that looks really good. Like they're not going to say like, oh guys, we did really good this quarter, but we screwed up a little bit over here. Maybe we contracted margin. They're going to kind of fluff it up a little bit to make themselves sound really good. So it's always good to look at these press releases and then look at the numbers yourself and then see what other people say. So that way you don't kind of come into it like biased. You know, because if you start reading like tweets and stuff as soon as earnings come out, like you're already going to get like this biased notion of whoever is the author is of that tweet for how the earnings actually did. And of course, if you look at the price action, again, you're going to be really swayed. Like the thing is on 10%, you're going to look at the earnings press release or you're going to look at the financials. You're going to look at for every single negative possible thing you can see on there. But if you look into their numbers first, then you'll kind of go in there unbiased and then create your own opinion. And then you can look at what the tweets say, what the news articles say, and so on. So they came into the Q1 fiscal year 2025 earnings, increasing their earnings about 20% to $1.03 on a GAAP basis. Non-GAAP basis 17%, but non-GAAP is not really relevant most of the time. Their Q1 total revenue was $13.3 billion, and that was up 7% year over year, 8% constant currency. I mean, the constant currency, like usually you're going to see the constant currency with like large mega cap companies or large companies because they tend to deal with currencies around the entire world because a lot of the customers are international. So they kind of give that constant currency just to, you know, because currencies are so volatile every single day. Like they basically track all their currencies based on one rate for that quarter to kind of give you like this is the currency rate that we started the quarter and we're ended the quarter in. That's how we're going to measure all of our earnings when we convert all of the currency to US dollars. So you know, 7-8%, like it really doesn't matter. Like it was single digits, which is pretty normal for Oracle. But the big thing that I noticed about these earnings were that their remaining performance obligations were up 53% to 99 billion for Q1. And when you think of RPO, it's not revenue or okay. So let me back up a little bit. When you have a revenue for a company, that's basically all the money that was billed to all of their clients and invoiced to all of their clients for that quarter, meaning that if they bill a client $1 billion and the client pays in a few weeks after the quarter ended, that was still invoiced for that quarter. So that ends up showing up in that revenue. When you think of remaining performance obligations, this is basically billings that were not, or this is billings for contracts that were not actually invoiced to clients during this quarter. So they are not recognizing this revenue this quarter. But the way that software companies work is that because they provide a lot of these forward metrics, like most of their clients are signed up through contracts, and those contracts are divided amongst several years, maybe 5 or even 10 years in some cases. But it comes up with an ACV, which is annual contractual value. And that ACV is calculated toward the remaining performance obligations. So this is revenue that is not actually realized yet, but this kind of gives like a future perspective of where the earnings or where the revenue might head in that direction for upcoming quarters, right? So if you see that they grew like 7 or 8% this quarter, but then the remaining performance obligations is up 53%, there's a pretty damn good chance that this revenue will accelerate toward the next few quarters. And that's the reason why this stock got bit up like mad after its earnings. Let's actually take a look at the chart for a second here. I know we're not supposed to be biased about this, but I just want to give you an example to kind of explain what's going on here. And then you guys can form your own opinion. But hold on. Let me switch this over to this guy. Oh, look at that. Market opens in 3 minutes, or futures market opens 3 minutes. Okay, so yes, I was right. They reported the 9th, which was a Monday. Okay, my bad. I said Tuesday they reported. I actually meant Monday. But anyways, they closed at about 140 and change, and then they opened up the next day at 157. So that's like more than a 10% rally after those earnings. And I mean, looking at the price chart for Oracle, this thing has just literally been up and to the right since 2022. Yeah, they kind of pulled back a little bit from 2021, but like they only reached like about $100. And I'm not including dividends here. So, you know, it's only a few years. So I don't think dividends really matter a lot, considering that their dividend yield is, yeah, it's like 1%. So it's not really going to make a big deal. But the thing is, like, Oracle is not a high growth hyperscaler cloud service provider. Like they're I would say they're kind of legacy, because most of the revenue did come from their software suite. And yes, they did have a bit of OCI or Oracle computing infrastructure, or I forget what the OCI stands for, but it wasn't like their main source of revenue that's coming in. They had a lot of staking applications, but the fact that they are growing very quickly when it comes to their infrastructure build out, that really is the selling point of this company. And that's why they're up almost 50% year to date, because they have this large stream of massive revenue or even RPO sliding in, and the market didn't expect that. And now that it sees it, they need to rediscover the price of Oracle, or the valuation of Oracle, and the multiple that it trades on. So really, like when you saw this thing up like 53% year over year for Q1 RPO, like that was just surprising the market. And they came in and they bid this thing the F up. Like it was pretty insane move for Oracle. And then over here, cloud revenue, 5.6 billion, up 21% year over year, which is still really good as well. Cloud infrastructure up 45% year over year. And this is what I was talking about, their OCI or cloud infrastructure. 45% is a very big number. And then of course they got their flagship applications here, Fusion, NetSuite, and so on, a bunch of ERPs, Fusion Cloud, part of the OCI in there. So, you know, the rest of this, I wouldn't say it's like too wholly relevant to the reason why they're up over 10% after the last earnings, but like when you are growing this big on your RPO year over year, like that's a monster number, and especially when it wasn't even expected. So, I mean, for the most part, everyone is saying like, "Oh, Larry Ellison is like a baller now." You know, he's like he's like the next CEO of AWS, or I guess the AWS of Oracle in this case. And you know, he's getting a lot of spotlight and stuff. But honestly, Larry Ellison was always a rich mofo to begin with. So like this is yes, he did increase his net worth by a good amount this week. But like Larry Ellison was always a tech genius. So I was sharing the wrong screen there actually. So let me actually continue to share. Let me continue to share this screen. And what I want to actually show you guys on finchat.io is I'm going to bring up their RPO, or remaining performance obligations. I'm going to show you how much that's actually been increasing lately. So if I go to finchat.io and I go to the segments of KPIs here, I am pretty sure this is going to have the RPO in here and not make me look like an idiot. Okay, great. So it's actually here, and it's actually pretty good because I think this is annual. Yeah, I'm going to go to quarterly. Let me show it the other direction. Damn, they really updated this thing lately and just confused the hell out of me. How do I flip this thing? All right, well, can't really figure that out right now. But am I sharing it? Yeah, I'm sharing it. I'm just going to go full screen on this guy right here. Hold on. I want to zoom in for you guys so you can get a better look here. Here we go. Underperforming obligations. Okay, cool. So I'm going to go quarter by quarter here. And no, this is not fully updated. All right. I don't think this number is accurate. So this is going to be pretty hard to tell on finchat.io. But I mean, you guys get the gist of it. I mean, 53% up in RPO from last year is a pretty big deal. Shows them a very strong backlog. And honestly, the quarter was really good. I didn't expect it. I wish I had a bigger position in Oracle, but I don't. They increased their quarterly dividend, which is great, but you know, people are really buying it for its growth at this point. They're not so much buying it for its dividend, which is what people have been buying it for in the past. So that is it with Oracle. Yeah, they also had an additional partnership with AWS and Google as well. But the surprising part with that was that Oracle has always been a competitor for AWS, but now Oracle is borrowing some of AWS's data center build out. So then that way they can build their Oracle Cloud or OCI on top of it, and then resell that to clients, which is actually pretty interesting. That's how that game kind of works. But you know what? To be honest, anything good for Oracle is really going to be good for all the public cloud providers at the same time. So that's always good news to see. And also, in addition to that, this week, I believe it was Thursday after hours, Oracle came out and they basically projected that their fiscal year 2026 revenue is, they increased guidance and they're expecting revenue to be at, I think it was about 65 billion. And then they're expecting the fiscal year 2030 to be at about 108 billion or something like that. And that's actually, let me bring it up on Seeking Alpha. You know, actually I made a post about it on YouTube now that I think about it. So let me just go over here to my profile. No. Here it is. Okay. So, yeah, this was Thursday after hours. And what I said was Oracle sees fiscal year 2026 at 66 billion and fiscal year 2029 at 104 billion with EPS growth of 20%. And this was actually pretty interesting because what the analysts guided for was that the low end of the range was 62 billion for its fiscal year 2026. This is a fiscal year end period ending in 2026. And the high was less than 66 billion. And they came in and they're just like, we're going to do 66 billion. So when you come in like not way above, but when you come in more than the upper end of that range, all these analysts need to redo their estimates and refigure out where that range is going to be. And I would say that the new range is probably going to be somewhere around like 65 to 70. And that means that the multiple that it's trading on for fiscal year 2026, or I think that's like the 2-year forward revenue, that's going to have to be repriced, and that's why the stock was at 8% after hours on Thursday. In addition, the upper range for fiscal year 2029 was 99 billion, and they came in there like, we're going to do 104 billion. So again, that needs to be re-rated, and this is why with announcements like these, that stocks just like jump crazy after that, because it's not just that the news and the algos are picking up this big number, but these algos, they process this stuff in like seconds, right? And when they process it in seconds, they see the new valuation and they start bidding up the price as it gets close to that value, because they want to get ahead of the other people who are going to buy it. And when that happens, the thing just gets bid up. For every buyer, there is always a seller. But when the buyers come in and they say, I want to buy at the ask, and the sellers just take that because they already have a sell order for that, then that means that it's jumping up that much faster in price. And that's how something gets up 8% versus just like kind of drifting up over time. So the interesting part with this that I saw, because when I saw that jump up 8%, I was like, okay, the market's kind of getting a little bit ahead of itself. The interesting part, and let me share my trading view screen over here. The interesting part was that after hours on Thursday, this thing was up 8%, right? It closed at 161, and then after hours, it was like 173-ish. And then before the market opened, it was at 174. So it was like 10% up. Yeah. No, it was like 5 or 6% up at open. And the whole thing just like drifted down to 161s. When I see something like this, I think that a lot of traders got in it after hours, and during the day, a lot of people tried to chase it, and then people got stopped out of their longs, whatever, people sell throughout the day, whatever. And then it ends up ending up pretty much nearly flat. It was up 0.4% for the day. And when I see that, that kind of tells me like, all right, the market kind of got a little bit ahead of itself. This is fiscal year 2026. This is it next quarter. So a lot can happen, and they just reported Q1 fiscal year 2025. A lot can happen in almost 2 years, more than 2 years, 2.5 years, right? So, I mean, yeah, it got ahead of itself. Like, people bid this thing up like crazy. They got a little too excited. And then as they saw the price come back down and losing its gains, maybe they got scared, stops got hit, whatever it is. And like, to be honest, I mean, I feel like if you bought Oracle in like the 120s or something, or maybe even the 130s before the earnings happen, like, okay, yeah, you're still sitting on some pretty good gains. You could probably hold out for a little bit. But if you like bought it after its earnings, after it opened the next day around like 160 or high 150s, like, I don't know what your risk reward is at this point. And I'll get a little bit into that when I talk about Adobe later on. But for the most part, the company's doing really good. I think the market did underestimate them coming into the last few earnings that got released. And I think the market is kind of digesting that right now. But honestly, it really depends on the macro in the near term for the time forward. Oracle would do really good as a company, but I think that if you want to buy it now, you have to have a very good stomach, a very big stomach to hold it, because there's a pretty good chance this thing isn't going to go berserk and go to like $200. Like, the multiple it'll be trading if it got to $200 would be pretty insane, even for a high single digit growth. Remember, this is RPO. This is future expected unbilled revenue. So the clients can cancel, anything could happen. But I'm not saying they're going to cancel. I'm just saying like it's pretty risky to buy in now and hope it's going to go higher, because then you might be chasing. So that's it I'm going to close that one with Oracle. What I wanted to talk about next is, I was actually supposed to talk about Broadcom first, but it's all right. I'll get into Broadcom right now. Let me jump into the Broadcom earnings. All right. AVGO quarterly results. Okay, so Broadcom earnings. Now, these earnings were actually a couple of weeks ago. They were not last week, but I didn't see too many people talk about it too much. And I think, in my opinion, I don't know if the market has fully, I think, okay, so let's actually take a look at the at the chart real quick so I could kind of explain to you my thought process for Broadcom's price action in the last couple of years, right? So if we go down here, I'm actually going to go to a cleaner chart. No, I'm going to go to a much cleaner chart than that. All right, so if I go on the weekly chart, all right, this thing is going berserk, right? But if we go all the way back to 2022, Broadcom is trading at 67 bucks. All right, so this is before the 10 to 1. This is before the 10 to 1 split. You just times it by 10, you're at 670 before 2021. And then in the bottom of the market in October 2022, the thing was trading in the low 400s. Oh man, he's a lightweight, dude. You're always coming in with this stuff, man. I don't know if you're a DJ and you're looking at a gambling company, but I mean, Wynn's a great company. Don't get me wrong, but yeah, we'll get a little bit into that later on. Anyways, if I look at this chart back in late 2022, the thing ripped up. And this is probably on the back of, the whole AI chat GPT coming out, NVIDIA rallying up. This is like when NVIDIA is gaining a lot of steam, right? Early 2023. And NVIDIA was actually trading like around low hundreds pre-split. So like around the teens, right? Around this time. And it's, picking up a little bit of speed. The market still doesn't kind of believe this rally that's happening right now. The S&P 500 is like around 4,400, right? And like it came from a pretty nasty bottom around 3,600, right? So it rallied pretty hard in like a matter of half a year. And the market still doesn't believe what's happening because for a year you had the Fed increasing rates and still increasing rates around this time. And the market, there's like a lot of economists out there that are saying like, oh, this is just a dead cat bounce, blah, 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 all this mumbo jumbo, whatever. And then Broadcom has its May 2023 earnings and the thing pops up like 20%. I still remember that day. I still remember looking at those earnings. I'm just like, what in the world is happening right now? Like I didn't really understand the whole AI, all this stuff that's happening. Like I understood it from an IT perspective, but I didn't understand like why in the world is the market getting so damn bullish on this when like there's no revenue really being realized anywhere. It actually did take me until like mid-May to like realize what was actually happening. But at this point, the market kind of sniffed Broadcom out and is getting a little excited. So I was like, all right, well, let me look into Broadcom, right? And this is actually, I mean, I can actually go back here. That was better for me to look at Seeking Alpha for this one. Am I not sharing my screen? Okay, good. I just realized I wasn't sharing that screen, which is good because I didn't talk about it yet. Okay, so Seeking Alpha, let me go over here to their earnings summary, and I want to go on a quarterly basis. All right, so this would be for the April 2023. And if we just look high level at these earnings right here, revenue, they beat by 26 million. I mean, that's good, but if you're making $9 billion and you're beating by 26 million, that's not such a big deal, but there's a pretty good chance that maybe I was here. Let's see here. April 2023, fiscal quarter 2023. Q2. Okay, so they're actually reporting. What's up, June? What's going on, girl? Fiscal quarter. Yeah, they didn't really surprise Wall Street, so I'm pretty sure around that time it was actually a surprise guidance. So that's fiscal quarter Q2 2023. Sorry, guys. I got like the camera in the way over here, so I'm like trying to look past the camera. All right, so revenue 8.7 billion for second quarter, fiscal year 2023, up 8%. Great. That's great. That's great. Keep in mind, I mean, like they're posting big gains year over year for the revenue, but they hadn't actually realized the revenue from VMware yet. And I don't think they actually finished the acquisition for VMware, so that didn't end up in their balance or their income sheet yet. So, Broadcom second quarter driven by demand for next generation technologies from hyperscale, while enterprise and service providers continue to sustain. Hock Tan. Hock Tan's a CEO, by the way. This guy is a monster. He is the cheapest mofo out there in the entire world. Like, he really runs his companies thin. So, consolidated revenue grew 8% year over year. Blah blah blah. EBITDA increased. Blah blah blah. To 65%. Great. And let me see if they have their outlook over here. Third quarter guidance is 8.85 billion. You know what? I don't think this is the quarter that I was thinking of, but when I see a company jump like 20% after earnings, that's trading like about, I think it was like about a $400 billion company. That's a pretty monster move. But I mean, this quarter made a huge difference. And I think this was actually around the time when NVIDIA reported their monster earnings, where people didn't see that thing coming. It was up like 100% after hours, May of 2023. But this is really around the time when the AI trade really started to pick up steam. And if I go back to the chart over here, like, this thing has just been a straight line up. Like, I'm looking, if I look at this chart at scale back up until 2020, end of 2024, like, this is at scale, right? And then if I just scroll to the right, like, I can't even, I gotta go all the way up. Like, this is crazy. Like, when you see a move like this is insane. Like, this is a crazy move for any company in the stock market. And when you think about this move, something had to change. Something had to really change with this company that really let it get bid up this crazy, like up over 100%. I think year to date, where is it at year to date? Year to date, this thing is up. Great. It doesn't tell me. That's awesome. I probably disabled it in this stupid chart. Hold on. Okay. So year to date, this thing is up like 56%. Great company, great CEO, really runs his companies lean. What are they doing lately that is making this thing rip so hard? And okay, so Broadcom is a very diversified business. I'm going to go back to their earnings slideshow here, and it'll kind of give you a little bit of a high view of like what this company actually does, like what they're made up of, what kind of businesses that they own. Dude, this website is like so lean that, like, I don't even know where to find a freaking PowerPoint. Somebody help me out here. Like, like, this is the most plain website I've ever seen in my life, and Hawk 10 makes it so damn hard to find anything on here. Like, I just want to find their slide for the most recent. Okay, hold on. Broadcom. I think it was Q3 fiscal year 20. No, Broadcom quarterly. Yeah, you're probably right, ETF, but I'm like so stubborn as hell that I'm going to keep looking the way that I'm looking until I give up. Okay. I'll just go back to what ETF phone home was saying. Here it is. Okay, events. And where did you see the events and near the top of that list? Here it is. Wow. 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 Okay. No, I missed it, didn't I? These people don't make anything easy here. Is this it? Yeah, I think this is it. Okay, cool. So we got Broadcom. And so this is the thing with Broadcom is that it's kind of like Salesforce, where they're a company that just acquires different companies, reshape those companies, fire like a lot of slack, a lot of fat from the company, and just go lean, increase margins and so on, and like just generate profits, and like they just move on after that, right? They just keep doing it over and over again. And Broadcom was actually not called Broadcom until they labeled this up in 2016. They were AVGO Technologies. And what happened was that they actually acquired a company and then rebranded themselves as Broadcom. But for a while, though, they were not considered Broadcom and not really known to what they actually do today. And then over here in 2017, they acquired Broadcom. They acquired 2018, they acquired CA Technologies, which is actually a pretty good company. They built a lot of workflow application to run different types of processes and automate different types of processes, scheduled, non-scheduled, whatever it is, on-prem. Semantic, this is an endpoint management or enterprise security software. And then they went ahead and they acquired VMware in 2023, and they actually started realizing that revenue until like a couple of quarters ago. And that's really what this company does from a high level. But their primary technology or their primary hardware that they sell is mostly networking hardware or chip hardware for a lot of computer hardware. And now, I think about like 60% of the revenue is still in semiconductor solutions. And this isn't like GPUs that you would normally be thinking of. Yes, they do own a lot of IP, which is designs for a lot of chips that they build for like Amazon or Apple, Silicon, whatever it is. But a lot of this is basically a mix with like a lot of different hardware. They got mainframe, distributed, cybersecurity, storage, area. Sorry, this is the first one: networking, server storage, broadband, wireless, industrial. Like if you built a computer before, then you would just know what Broadcom is without even looking at this presentation. But they're becoming very big in the enterprise hardware space, which is really good because that's really where the money's at. And then this infrastructure software, most of the revenue from here is actually from VMware. But like I said, they did acquire a lot of software and application companies, including enterprise security when it comes to semantic. So they do realize some revenue for that. And really the selling point for this, I would say, is mostly in the IP or the designs that they have for Google or Apple with their with the M-line chips. And on top of that, I do think that we're probably at the bottom, or we have already bottomed on the mobile device secular trend. A lot of people saw the Apple presentation from last Monday, and they're like not really impressed with it. Like, don't get me wrong, like the iPhone 16 is not really anything new per se, but I do think what people kind of underestimate is that it's not just the US. Like if you were to watch a presentation, you live in California, you watch a presentation, you're just like, okay, well, this is the same crap that I've seen all the time, right? But if you have people who watch the presentation of the iPhone 16 from like, let's say Australia or something, that might be like something they're excited about, right? So they might realize this revenue, especially from China too. If Apple starts to pick up steam off their sales from China, Apple's going to be like, well, we need to make more phones to sell to these customers, right? And if they make more phones, they need to make more CPUs and chips. And if they need to make more CPUs and chips, they're going to go to Broadcom and be like, hey, Mr. Hawk 10, we need to order more of these chips. And then the orders come in, and then Broadcom makes more money because it's mostly, whenever it comes to hardware, you make the money really off of the volume, not so much selling like a couple of million. You need to sell like tens of millions or hundreds of millions in order to really make some good money on that one. So I think this is where Broadcom's moat might be centered around for the time being. They do have the infrastructure portion, which is mostly from VMware, but that is not organic growth. When you think about it, like they acquired VMware, they took on the revenue, they took on the business. And yes, Hawk 10 is making the company a lot more lean by laying off a bunch of people, overloading the amount of work that people do, working them to death and whatever, and basically getting more bang for your buck. And I think he could definitely do it successfully, VMware. And I do think I personally think this is a great company to own for a long term. In the short term, I don't know, but I think the market might be sniffing out the fact that it's possible that the mobile device market can widen a lot faster than people think. And in addition, the sales of accelerated compute from Google's proprietary CPU as well as Amazon's proprietary CPU or Gravitron can create some sort of uplift and unexpected surprise upward direction for their infrastructure solution, for the semiconductor solution for this company. And if that happens, you might see people start to bid this mofo up. Just over here, looking at their annual financial data, we see here that revenue is increasing in the good range. The margins did kind of pull back a little bit this quarter, which is probably the reason why, like, there were high expectations coming to this quarter. People really thought Broadcom was going to blow it out of the water, which I think they did. I thought their earnings were really good, but like when margins compress, like it doesn't matter how much companies guided for that. Like, for example, NVIDIA, like they said repeatedly, our margins will contract next quarter to the mid to low 70s. And it did. And then Wall Street comes out and they're just like, what the hell? What's going on here? Like, this thing is slowing, whatever. Like, they just sell the thing off like 10%. So, like, when something like that, what happens with any software or hardware company, like they sell the thing off, right? This thing was down like 10% after last earnings. And the interesting part was that the thing sold off. The last earnings, the thing sold off. Let me actually bring up this chart here. I'll do the 1 month. Oh my goodness. My brother trades futures. He's crazy when it comes to this stuff. So the thing sold off down here after the last earnings, right? It closed on Thursday, the other Thursday, a week before last Thursday, closed at 153, and then it opened next day at like 135. Like that was crazy when I saw that it happened, because I think that's a pretty big move for a company of this size. Like this has a market cap of 783 billion. Like that's no joke. Baby moves for NVIDIA, but like still for a company of this size that isn't NVIDIA, this is a pretty fierce move, right? So it drops down like 10% and then closes a week before Friday at pretty low levels. I think it was around the 200-day moving average, which is a pretty significant area for pretty much any company that trades in the stock market on a long-term basis, right? The 200-day moving average is a pretty big deal. A lot of algos look at that. If that breaks, then there's a pretty good chance that Broadcom would have sold down probably like 125, maybe even low 120s. But it didn't. It had a monster bounce off of there. And starting on Monday, this thing ripped up, and it ended the week 20% up. Like, that's a crazy move. I wasn't so worried about this company. Like, I was still holding. In fact, I did add to this company. It was funny because I was watching Amit's live stream when this happened. And I was like, dude, I'm buying the freaking dip like on this thing. Like, this is pretty crazy that they were like selling stuff, because this was actually a pretty good quarter, right? And even I'm pretty sure June bought the thing up too, which is great. And the thing like rips like 20% a week. That's a pretty big move. Like, if you're going from, let me whip out my calculator. Great. I actually typed up calculator on there. I was looking up the word calculator into the stock charts. That's great. Nice work, Sam. So if I'm going to open up my calculator here. All right. So the company is trading at 783 billion. I'll share my calculator. Company's trading at 783 billion. All right. And then so that's 120 divided by 100. So times 1.2 divided by, no, that's not the right way. So I'm trying to think of how it's 20%, 1.2 times 135 divided by, okay, so it'll be 783 divided by 1.2. Okay, so it's trading, it added about $130 billion of market cap just this week alone. Chump change, right? That's like nothing. So, I mean, that's a pretty big move for this company. I have a feeling Wall Street is kind of thinking that there's something behind this company that people, or that hasn't gone public yet, or people are speculating on. I think they're starting to see that it's very possible that there will be a lot of growth coming for this company in terms of its semiconductor and hardware solutions. Like I said, for the mobile device sector, I think there's a new secular trend coming with mobile devices. I think there's been a huge slump when it comes to selling iPhones lately, as well as all mobile devices, and the consumer sentiment is perceived to be weak, even though numbers show that consumer sentiment is actually pretty good. But I think that we're going to start to see big growth in consumer mobile devices, or Apple per se. I think that the utilization of CPUs from Google, Amazon, and even CPUs from Apple, from MacBooks, watches, whatever it is. I think that that's going to come back, and I think that a lot of that revenue is going to be realized from Broadcom as the quarters move forward. I don't think it's going to happen like in a couple of months or next quarter, but I think they might guide for it next quarter, which is why I'm continuing to stay long Broadcom as a pretty decent size of my portfolio. So I would say that's good enough for Broadcom. And the last thing I wanted to go over are some software multiples. You know what? Let me catch up on the chat here. Hey, Sam, appreciate your comment. Cybersecurity Substack. Thanks for putting me on Rubric as well. Definitely. Yeah, man, dude. Or Samarth. Yeah. Person. So I think that I've talked about this a lot in the past when it comes to Rubric cybersecurity. Now that, thank you for bringing that up, Samarth. Let me bring that up first. All right. I'm going to start off by bringing up the freaking camera's like in the way of my computer. So I have to like look around it just to like see my monitor. I actually had it open. Here we go. All right. So Jam and Ball is actually someone that works for Altimeter, Brad Gerstner. And every week he releases an article. He's probably got some like crazy spreadsheet or proprietary software that he uses and spits out these crazy graphs that are really cool to look at sometimes. But I mean, at the end of the day, if you have no idea what you're looking at, then like you just have no fucking clue what you're looking at. Rubric reported their earnings. They reported their earnings last Monday. The same time that Oracle reported the earnings, and like no one gave a shit, which is probably pretty expected because Rubric is an $8 billion company. Sorry, a $5.5 billion company, and Oracle is worth. How much is Oracle worth, guys? I mean, I have no idea how much Oracle is worth. Oracle is worth $450 billion. Chump change, like that's nothing. So anyways, Rubric had earnings on Monday, and the interesting part was that they beat guidance, they beat the top line, they beat the revenue, and they beat the earnings, but the market still sold it off. Why did they sell it off? I do think that it's very early in the game for Rubric. Rubric is a cybersecurity company. However, it is not the same cybersecurity company that a lot of you know as like CrowdStrike or Palo Alto, whether it comes to enterprise security, whether it comes to endpoint security management, something you install on your client. So maybe in like Windows, you install like a little application called CrowdStrike or Falcon, whatever it's called, or Sentinel-1, whatever it is. And Rubric is quite different. It deals in a different field in cybersecurity. I'm going to actually bring up this really cool graph from this gentleman named Eric Flanagan. All right, where is it? Data. Nope. I'll share these later on if you're in the Discord. Here it is. Cybersecurity primer. Go down. Here we go. So this is actually a really cool graph that he made up, and totally credit to this guy. I like his Substack. It's really good. Really explains a lot of stuff. So when you think of like CrowdStrike, you're really thinking more in terms of cloud security, right? And then you also have, well, actually, no, this is mostly cloud security, right? So you got Falcon in here. Palo Alto Prisma is another. Actually, I don't think it's Prisma. I forget the name of their endpoint solution, but this is more of securing clients, right? So if I'm on my computer and I download a file that has virus in it, right? Like this, the software is going to protect me from it, right? So there's also data security, which this is a pretty wide bucket because CrowdStrike's on here and so is Datadog. And when you think of data security in these perspectives, like if you think of like Datadog or CrowdStrike, you're thinking more of CM, even though they have it down here. They kind of split it into two different portions. But like when you have an application, the application has they have logs that come out of the application, right? So it's like when someone logs in, it enters it into its log, which is like some text document that sits on the server that's hosting the application. And it spits out this line that says like this IP address connected here, or this IP address got this error here, whatever. And you push these logs into like, let's say Datadog, which is like an application monitoring or CrowdStrike, whatever it is. And you can kind of aggregate all these logs and then search through it to find like maybe a pattern that's happening in all these. Like, let's say someone says, hey, my system's not working, or my application is not working, it's breaking, like what's going on? And then you're an IT engineer, so you go to Datadog and you search error code 500 or whatever the error code is, right? And you say like, holy crap, this isn't just happening with this person, this is happening with everyone, right? So that's kind of where the data security for log management comes in, or CM. Rubrik is a bit different than that. So for all of these critical systems that these companies have, they take backups of their systems, and they store these backups or these snapshots in a centrally managed location, whether that be tape backups stored in some warehouse in Geneva, whatever it is, or whether that's online in AWS or something. And it's centrally managed in there, and Rubrik manages all these backups for you, and keeps like a collection of it, like, you know, from everything, for whatever retention policy you want to keep all backups from 30 days back, whatever. It's like, that's like the basic feature of Rubrik. But what Rubrik does in addition to that is that they're able to scan all of these backups to make sure the backups are clean from any malware, any vulnerabilities, whatever it is, and even private information data. And they're able to have this readily available for you. So that way, let's say you do get a virus, or let's say someone does hack your network, takes your database, encrypts the database, says like, I encrypted your database and you can't read it. You need to pay me $1 million of Bitcoin and I will unencrypt it and give it back to you. Like, this is what happened to United Healthcare with the ransomware. This is what ransomware is. That's why they call it ransomware, because they're ransoming your data before they give it back to you, right? Like that's where that keyword came from, ransomware. They're ransoming your data. And unfortunately, United Healthcare had to pay these hackers back. But if something like this happens with your data, Rubrik's like, no, don't pay them. We got your back. We actually have a backup from like an hour ago, and we already scanned it for you. And the hackers didn't get in over here. So what we're going to do is we're going to restore that very quickly for you, bring you back into working state, and then we're going to work with you to fix that vulnerability. So if these hackers come back in, they can't take your data and do it all over again, right? So that's like kind of their selling point when it comes to this product. And the thing is that a lot of companies, they try to save money, especially in certain critical systems, which I don't really agree with, but companies try to do that. Like, cybersecurity is not cheap, right? So if they see like a big dollar sign somewhere, and let's say, you know, they can kind of get away with the compliance, whatever it is, they kind of like drill that down, or maybe they lead it up a little bit so that way they don't need to pay so much money to these companies. But one thing that they kind of neglect is the backup security, right? And that's where kind of a Rubrik comes in. I think a lot of these CIOs are starting to realize that, or chief information officers are starting to realize that. CIOs and chief information officers are like the head of pretty much IT. But it spans across multiple verticals in a company. But CIOs generally make these decisions for spending on large products, contracts, or whatever it is with different softwares and vendors, right? So they come in and they're just like, we actually need something like this. So if I need to set up a backup security solution for my company, I don't want to go with like some lowbrow company. I want to go with like the best. Like, who are the market leaders? And I'll actually give you guys a little bit of a preview. There's this company called Gartner, which is like this IT review company where they review multiple products. And they actually release, usually on like a semi-annually basis, they release these things called Magic Quadrants, which kind of gives a visual pleasing view of a particular product sector. So if I wanted to look at Rubrik, I look at backups, right? So if I, excuse me, these mofos are probably going to say I need to pay them money to look at their chart that's like publicly available online. Yo, what's up, Zocold? What's going on, dude? So here we go. This is a pretty good one. June 2024. Perfect. June's a really good month. That's my birthday. That's my birthday month. It's a really good month. All right. So if I look at this Magic Quadrant enterprise backup and recovery software solutions, the way that a lot of these CIOs work is that they actually have no freaking clue like what the best product in the market is. And depending on how big their wallets are, right? Usually they're pretty big for cybersecurity. This is the reason why I think cybersecurity is like a major secular trend, because all of these ransomware and hacks that are coming out and stuff, like when people are unprepared for this stuff, they tend to like go for the best one that they hear about, right? And they like pay a lot for it, right? Let me get it, right? So they go to a company like Gartner, which is very reputable when it comes to reviews for different applications and software that's out there, and they look at this. I haven't liked you. Yeah, no, June's a really good month. So they happen to look at this chart. You guys can see it, right? I'm not just like looking at this and talking about this without actually having it on here. Let me actually make this bigger. So keep on making certain ones bigger. Stupid screen. And boom, there you go. And boom, there you go. Okay, that didn't even make a difference. So anyways, you guys might just have to deal with this. Maybe you could see it. Hopefully you could see it. 1080p, let's go. So you look at this chart, enterprise backup and recovery software solutions, which is what I was discussing, right? There was an old way to do backups in the past. There was something called tape backups, where like you would literally go into your server room, you'd see your big server, right? And your server would be connected to this gigantic other server, your backup system, right? And the backup system would have like these little slots that like you put this disk or whatever thing inside. They would call them tapes, right? Because it was literally like a big cassette tape, but it would be able to hold large amounts of data and be able to write to it fast. So it became like a thing, for a period of time. You'd shove that thing in there. It would back up all the data from the server that's like right below it, or the server in there, because that's usually the fastest way to traverse data internally. And it would back up the data and it would say it's complete. It's like, okay, cool, this is complete. And like some dude would like come over and be like, hey, give that to me. I'll put it in some cold storage. And like you do that, and like boom, boom, boom. This happens every single week, right? So this is a service that Commvault offered, and it's been used for decades, right? And they are still dominant in today. Believe it or not, people still back up their shit like this, right? And it's like 2024 and people still use tape backups. Like, I don't know why. It's just like people watching Little Mermaid on like a VHS cassette tape. Like, it is like, what the fuck? But people still do it, right? People still use fax machines, whatever. So the thing is that this is the old way to do it. The new way to do it, if you're storing your servers and all your information in the cloud, like AWS, whatever, you're going to automate those backups. Do you think Kris is pessimistic about next year? I don't know, James Burrs. I'll get back to that later. Sorry, I got a little bit distracted. But anyways, you would store this data in like AWS, and you'd create snapshots, which is basically creating a digital backup of your server that's stored in AWS. And then you would keep it in an EBS volume or an S3 bucket. But what you would do is you wouldn't manage it on your own. You'd pay a company like Rubrik to integrate with your AWS account, and Rubrik would basically aggregate all this data to keep specific locations at index for all of these backups, whether you're using AWS or Azure or even GCP or even Oracle if you're really floating your boat over there. But it would aggregate all this data in there, and it would scan all these backups to make sure there's nothing hackable on there, nothing that's vulnerable, whatever. And then you could just restore everything in like an hour if your system goes down, if you get hacked, whatever. And that's a good part about this technology. I'm not trying to be a selling point for this, because Cohesity does do the same thing, and Commvault offers the same product, similar product. Veeam offers a similar product. But me personally, I think Rubrik is probably doing this the best, because I think their software is a bit more innovative than something that's legacy like Commvault or Veeam. Cohesity, they actually do have a really good product. But when you think of the marketing, if you got salesmen that are coming into your office saying that Rubrik is a better product, and then the Cohesity salesmen are coming in and they're saying Cohesity is a better product, and then Rubrik is a better salesman, they're going to buy Rubrik most likely, right? So that is what I think about Rubrik. And I did explain that for like 15, 20 minutes, but this is the thing that we all need to understand with these software companies, is that it's not just about how good the software is. It is about how good the go-to marketing team or the sales team is for these companies. You could have the best freaking product out there, but if your salesmen or your sales officers, right, don't know how to get someone to buy a product or don't know their customers that well enough to understand what their needs are and to understand how to talk them into thinking that they want something when maybe they don't, you're not going to make any money, right? So that's the thing when it comes to Rubrik. I did want to get into other software earnings multiples and Adobe, but I don't have time. All right. Unfortunately, I don't, but I will try to get into it maybe later this week. And I will get a little bit into Win. I'm sorry. I know you keep on asking about Win, dude, and I keep on like forgetting to go about it. I did kind of go over it with Kris the other week, and we did kind of both come into the conclusion that, like, you know, is it going to be like, it's a great company, offers a dividend, or I don't know if they still offer a dividend, but it's just like my opportunity costs that I have my money. Like, do I know when? Do I know the property behind it? Do I know do I know what I'm looking at when I'm looking at something like MGM or Las Vegas Sands, whatever it is, like how to compare those two companies, how to figure out like which one has a better moat than the other one, how to figure out, how the international impact is. But when I think it comes to Win, I think the biggest impact, the thing that's holding the company down is their China growth. China's not having exactly the best economy right now, but it probably will come back. It will come back. And I'm pretty sure when China comes back, so will Alibaba and so will Win. So if you really do believe in this company, I don't think that some mofo like me on YouTube is going to be able to explain it to you any better than probably Jeremy does. Actually, Jeremy would probably explain it a lot better because he owns the stock and the guy's big, the guy's a freaking legend, but I don't think you're going to get much value if I really go over that stuff. Where does Sentinel-1 fit in the chart earlier? So Sentinel-1 actually fits into probably endpoint over here, endpoint security. And I don't see it on this chart. Yeah, I'd probably say it fits more into the endpoint with a little bit in software security and data security and a little bit in CM. Maybe monitoring intelligence, but the company, Sentinel-1 is a pretty small company. It's like 10% the size of CrowdStrike, right? So they are not as far as CrowdStrike goes, but they do have a really good product. I think if you think of runway, Sentinel-1 has a much bigger runway than CrowdStrike. A lot of people wouldn't agree with me, but CrowdStrike is a lot less riskier bet because Sentinel-1 is a small cap company. And they have focused a lot on small businesses, right? CrowdStrike focuses more on enterprise. They have the big contracts. They have the big dogs going with them. They own 40% of the market share. So, I mean, you can own both. You can own both, dude. You don't need to just own one. You can own both. Sam, is Kris being? I don't know, man. You gotta ask Kris. He's actually going to be on Cash Flow Chronicles with Matt tonight, so be sure to check that one out. He'll give a little bit more of his insight. Yeah, I already said that one. All right. I think that is about it. I've been on for about an hour, and it was great. Everyone, thank you for joining. I'm going to try to do a lot more of these, as I was saying. So we have Kris and I, we have our Hidden Edge Pod series, which we usually do maybe on a weekly, bi-weekly basis. We're going to try to do a bit more episodes, more in like an every other day cadence. And we're going to continue to keep the late night ones. Those are doing pretty good. I enjoy doing the late night ones. The kids are asleep. It's at night for Kris too, so it's like less interruptions during the day. And we have a lot of subs from Europe and overseas and stuff in different time zones. So it's like really cool to be able to give them an opportunity to attend live. I mean, if I lived like in Europe, I'd be pretty bummed out that I can't see a lot of the stuff live. But to have that like live on in the morning, maybe while I'm working, whatever, like that's pretty cool to watch. So we are delivering that content for you live. And do we have a regular schedule? So I was actually talking to Kris about this earlier today. We're gonna try to go for Monday, Wednesday, and possibly do our late night and Tuesday. And the Mondays and Wednesdays might be like around 6:15, 6:30-ish Pacific time. So 9:15, 9:30-ish Eastern time. And we're gonna try to do those as North Korea would appreciate. And I think you said you were from you're from North Korea? Oh wow, okay. I don't want to say a joke about that because I feel like I get in trouble. But yeah, man, no problem. Appreciate your time. Hey, man. I don't know if you guys know. So if you guys are part of the Patreon for Kris and I, it's really cool. ETF, and I think he should, get a lot more credit for this. But ETF FaceTime, he watches these live streams and he like dissects it and creates like a review for everyone to read. And it's like really cool because if let's say you can't watch like an hour and a half stream from people or something or from Ahmed or whatever, like he goes in there, he summarizes it for you guys, and he posts it on there. So if you're in the Patreon, go to the Chit Chat Lounge and ETF post stuff in there. If you're not part of Patreon, feel free to comment down below. I'll give you some information, or you click on the link down below to subscribe. Really cool place. It's only $15 a month. It's not a lot. And that'll give you access to probably, I would say, 80% of the channels on there. If you really want to up your game to Inner Circle, you can go and do that. I'm not trying to make this a selling segment, but I'm just informing you. But I'm pretty sure there's other avenues where ETF does release his summaries in there. So yeah, I mean, go ahead and check him out, man. Yeah, man. Seriously, I don't, man or woman, I don't know. I don't want to make any assumptions there, but on behalf of the United States, we appreciate you. I feel like if I make a joke, I'm getting in trouble. So I'm just not going to say anything from there. So yeah, that's about it, guys. Thank you for joining. And hopefully I can release these on a much more, okay, cool. On a much more often cadence. All right. Take care, guys.